Welcome back, everyone, to Money Moves Podcast by KTVAECU. I'm Molly.
And I'm Caroline.
And today we're talking about a topic that will definitely help future you. So stay tuned. Welcome to Money Moves Podcast, the financial podcast without all the fluff.
We're Molly and Caroline, two financial marketing coworkers turned besties, and we're here to help you take control of your cash.
We'll break down everything you need to know to make smart money moves and hopefully not bore you to death.
Think of us as your financial hype squad, bringing you real stories and tips to help you start stacking your cash. So let's start making those money moves. We are not financial experts. We are just two regular people. Always do your own research and ask a professional for personalized advice.
All right. Before we jump into today's topic, a few weeks back, we went and visited ETSU students and just asked them what were some important topics about money, their finances that they wanted to know more about.
Yeah, and this is a big one. So roll the tape.
So tell me, what's a financial money topic that you feel least confident about?
Credit score.
Probably a credit score. Credit scores are very important, especially when you get older.
How do I know my credit score?
How do you improve your credit score?
What did you do to start building credit?
Applied for a credit card and started just using that for small things that I could just pay off easily at the end of the month.
Got a lot of credit cards and just paid them off over and over.
And that helped you build your credit. Awesome.
So credit score.
Yeah, it's a big, I feel like this is a really big one.
It is a big topic. And a lot of the students on campus, like we got that question so many times.
I feel like that's just a question we get in general a lot, not only if you're a student, but just if you're starting out, if you're building your financial life and your financial repertoire. This is a really big one.
Repertoire.
Yeah, that was also a big word.
I love it. Yeah, lots of people were asking about it. So let's jump into it.
Yeah.
So like, how does a credit score work?
Yeah, so your credit score, essentially, like how I explain it in very common words to my friends, is your financial reputation. You know, that is what lenders and financial institutions rely on to kind of deem how you're able to be given money and if you can be trusted with that money that they give you.
Yeah. They just want to make sure that you're trustworthy with the money that they're letting you borrow.
Yeah, and that I think the key is like they want to know you're going to give their money back. Yeah. And that's essentially what your credit score is saying, is that you are a reputable person who is able to be lended money and give it back properly. That's a huge one.
Yeah. Financially responsible.
Yeah. So technically speaking, Molly, walk me through, what is a credit score? Like when we say credit score, what are we even talking about?
Okay. So your credit score is a number. It's like a grade, so to speak. And it ranges from 300 to 850, with 850 being that's where you want to be. That's goals. Hashtag goals.
I have never seen that personally, but like if you got it, you're doing good. You're doing good. You don't even need us tune out now.
But yeah, so 850 is like the best that you can be.
Okay.
So, but we'll break it down so that way you can kind of know if you already have a credit score, where you fall into the different categories. So 300 to 579. We don't want to be there. We don't want to live there. That's what we would consider a poor credit score.
Okay.
580 to 669. That's considered a fair credit score. It's not great, but you could do better.
Yeah.
A good credit score is 670 to 739. And most of the time, if you're in this category, you're probably going to be able to get a loan or a credit card with people, just depending on where you go.
Yep.
The next, which is very good, is 740 to 799.
Okay.
Very good credit score there. And then, of course, if you want to be excellent, 800 to 850.
Yeah.
Which is where we all strive to be.
Yeah. I am striving to get into the 800s.
Yes,
My husband is there, but I'm not. So
yeah, same.
Yeah.
So your goal, like we said, is to get to that large number, that 850, as close as you can, because it will help future you. And we'll dive into what that means.
Yeah. And I think something that we get asked frequently is like, what affects my credit score, or does this affect my credit score?
Right.
And so we also kind of want to walk you all through, what are the things that make up your credit score?
Yeah.
The number one thing, and I'm going to read directly because I want to make sure that I'm telling you the correct statistics. So the number one thing, which goes back to what I was saying, what your credit score is is it as important for your score as your payment history? That makes up 35% of your credit score. So that's making sure you're paying your bills on time, that minimum monthly credit card payment, that's getting paid off. Any loan that you are being given, the minimum being paid, that is what is making up your payment history on your credit score.
Yeah.
So that's why it's really important not to miss one or to miss a few or to let those stack up. Like it's gonna ding you pretty hard.
It really does too. Like missing those payments, it hurts your score. But then when lenders go in and see your history, they can see those missed payments. And it's like, what happened here?
Yep.
Maybe you can tell me about that. So it's really the most important one.
Yeah.
So pay your bills on time.
Yeah. Pay your bills on time. Period.
So I know we talked about this a little bit in our last episode,
Yeah.
but credit utilization is also part of what makes up your credit score.
Yeah.
It makes up about 30%. And basically what that means is how much of the available credit that you have are you using?
Yeah.
Are you maxing out your credit cards? If you are, don't do that.
Yeah.
Because that can negatively impact your credit score.
Yeah, 100%. And moment of honesty, I had a moment a couple of years ago where I was really close to that threshold on one of my lower credit cards, and I did go over it, and it did ding my credit score pretty bad. I've had to work my way back up with that.
Yeah.
So I think keeping in mind where your utilization is at, and that's why it's so important to, have your budget, make sure you're checking your apps, and don't just put it off. Like, be checking where things are at.
Yeah.
I think that's why making sure you know where your utilization is at specifically is huge.
I kind of want to pause for a moment. I know we just jumped right in.
Yeah.
But I kind of want to pause and I know this all sounds crazy. Like when you sit back, it's like,
it does.
Here's this number that you have to have and it needs to be good. And you don't necessarily always learn a lot about it when you're in high school, but you need to have it. And there's all this stuff that makes up the number. It's like this formula, and you're like, what?
I think also talking about utilization gets me to that point that you're talking about, because I'm like, what do you mean there's an unspoken rule that I can't use the money that you're giving me to use? Like, I have to keep it below a certain threshold. And I didn't learn that until later, that you can't,
it's like, here are these 3 pigs, but you can only use one of them.
Yeah. That's that. Oh, and if you use all of them, that affects the made up number that we're giving you.
Yes.
So stack down.
Sorry. But yes, it's like we completely understand that this is one of those things that exist and it's kind of wild.
Yeah.
And there's all these unspoken rules, like you said.
Yeah. Which
we understand.
It's such a great segue into the next unspoken rule of your credit score, which is your credit age and history of your credit cards.
Yeah, how old should
or not just your credit cards, but everything. The age of your credit mix matters.
Yeah.
So when you have one of those older cards and you're contemplating like, oh, should I just close this? I don't use it. You really need to weigh the benefits of is that your oldest card? Does it have an annual fee? Like making sure that it's not impacting your score negatively and making your overall mix have a shorter average lifespan.
Oh, for sure. I think for me, when I first started building my credit, that was the one, I know it only makes up 10% of your credit score, but it was it literally is just time.
Yeah.
And it's you can't push that any faster than what it already is. You
Exactly.
just have to have length of history of time of age for that credit to build. So that one was always kind of tough when you're first starting out because you want it to happen so fast.
Yeah.
But it just takes time sometimes.
Yeah, 100%. I know I also mentioned credit mix a couple times back there. And what that is just the variety of the loans that you have.
Yeah.
And what that shows to lenders is that you can pay off various different types of loan. So that affects your credit score 10%, I think is the ratio we wrote down.
And by variety, you mean a credit card,
an auto loan,
a house payment, different variety of types of loans.
Yep.
And they're different. Mm-hmm. So the last thing is new credit. And you want to keep that at 10%, or that makes up 10% of your credit score. And by new credit, basically that just means you don't want to go out and apply for a bunch of new credit cards because you're trying to get approved for a credit card. Do your research, find a new credit card, or even applying for different types of loans, whatever it may be. Having all those hard inquiries, and we'll talk about what that means in just a minute, can affect your credit score. So keep that a little bit lower on the lower side.
Yeah, 100%.
So let's talk about, because obviously everyone starts somewhere. That's the thing. Everyone starts this journey somewhere. Let's talk about what we did specifically to help build our credit, and then maybe talk about some other ideas to kind of help all of our listeners get started on their credit score journey.
Yeah, I think speaking from my personal experience, I've kind of talked about it across a couple of different episodes, just from budgeting to credit cards. One of the pivotal things that I think my mom helped me execute in college was I got a really low limit credit card and only put gas on there, and was able to pay that off on a month by month basis. And that was one of the strongest indicators, I think, for starting me off with a good credit score.
Yeah.
That is the only way that I started. That is the only way that she explained it to me. So I'm curious to hear your journey, because I feel like mine might be a little typical of starting with a very baby credit card and then move it. And I think I said this in the credit card episode, but that one had a $500 limit until literally that's the card I went over on a while ago, because it has had a $500 limit since I had it, and I just now got it bumped up.
Yes. Making money moves over here.
Or 1,500. Sorry, 1,500. That's it. I was like, 500. That's really low. No, 1,500.
That's so funny.
Yeah.
So my credit score journey started. I feel like I was pretty young, and I remember my parents coming to me and saying, and so let me give you a little history. So I grew up in the 90s, where when you listened to music, you listened to it on CDs.
Yeah.
And so I remember my parents saying, like, we need to go open a CD and do a share secure CD loan. And I'm like, a CD? What do you mean a CD?
I can't open that.
So, like, I'm sitting here thinking, like, are they putting, like, money, like, financial information on a CD-ROM, like a disc? Do we get this disc and take it home?
Oh my God. You're like, this is so fun.
Like, I kept asking,
how do they get the money on there?
Like, how do they keep track of this CD with the money? Like, I'm so confused. And then obviously it has nothing to do with CD-ROM at all. So it's a certificate of deposit is what a CD stands for. Some institutions call it a CD, some call it certificate. But so my dad helped me we opened a $1,000 share secure certificate, and we set up that money on auto payments. So like I never even really did anything.
Yeah.
Dad just taking care of business.
Yeah.
So like we did this share secure loan. They gave us the $1,000. We put it in savings, and it just automatically made that payment every month. And I built my credit that way, and we just would renew it like every 6 to 12 months.
So interesting. Okay. Wow.
Yeah. So that CD-ROM really came in handy.
Yeah. We love the CD-ROM. That's great. How can other people get started if they're doing this on their own, or like literally just starting out for the first time and kind of don't have that guidance that we were provided?
Yeah. You kind of already mentioned it, but a credit card is a way. But sometimes when you're just starting out, because, as we talked about, sometimes credit cards are a little scary, or you don't feel confident enough in your journey yet to use a credit card. There is a thing called a share credit card, a share secure credit card, where basically you take X amount of dollars, so let's say $500. Your institution will put that on hold and then give you a credit card for $500. They do that as a safe way. So like, let's say you did get in financial trouble and you were unable to make that payment back, that money can go towards that. So it's a safer way, so to speak.
Yeah.
It's the same thing that I did with the share secure certificate.
Yeah.
So that's one way. Another way is just research a credit card and do a low limit, kind of like what you did, that's not secure, to kind of see how it works and what you can do with that credit card.
Yep.
If you're just like, you know what, I don't know that I'm ready to do any type of lending, and that's okay.
Yeah.
You can also be an authorized user on someone who's already established their credit. So for example, I could be an authorized user on my mom or dad's credit card or loan. The benefit to that is like, that's someone that's already established their credit and you're reaping the benefits because hopefully they're still making good choices.
Yeah.
But you really want to make sure that's with someone you trust and that is making good financial decisions, because as an authorized user, if they start missing payments, then that does affect you.
Yeah.
So it works both ways.
I knew a couple of people in college that did that with their parents. I just had never put two and two together with that until right now.
Yeah. It's another way, especially like I said, if you're just starting out and you want to start building your credit, maybe you haven't started into your career yet or anything, so you may not have a lot of income coming in steadily. It's a great way to get started, but just remember, make sure it's with someone you trust and they're making good decisions too.
Yeah. And then I'm going to build off of this, but jumping back to one of the first things we said in the episode, the number one thing that you can do to build up that credit score when you're starting it from scratch is to pay your bills on time. So things like your phone bill, your subscriptions, any medical copays and bills that you have like that, making sure that you're paying that on time. And also, if you do have a credit card, making sure you pay that one on time, because that is the number one thing that will affect your score. So there are also just a couple of things that, don't show up on your credit report until you miss that payment. So I think your phone bill, that's a big one. Yeah. If you're paying your phone bill by yourself, make sure you keep paying that on time and turning that in, because that, if you don't pay it, gets reported to the credit bureau.
That's such a good thing that you brought up, because I've been asked before, like, well, I pay my utilities on time. I pay my phone bill on time. Yep. And it's like, that's great. Like, I'm glad you're doing that. But those institutions don't report to the credit bureau until something goes wrong.
Yes.
And so, like, sometimes people think they're building their credit score because they're paying their rent and things like that. But you're not getting the credit for it yet. Yeah. Because it's just different. They don't report till you miss something.
Yeah. And I feel like that's like, it might feel a little unfair to hear that, where you're like, well, I'm doing all these positive things. Why am I not getting the benefits? I'm only getting in trouble if I don't. That's just, part of the institution of the credit bureau. It's hard to explain. It's hard to figure out the whys, but that's just part of it. So you won't get affected until it's negative, which is unfortunate.
And another thing to remember when you're out applying for a loan or a credit card, you want to make sure that whoever you're borrowing with reports to all 3 credit bureaus, because you want to get credit for what you're doing. So if they're only reporting to one credit bureau, you might want to consider a different lender, because you want to get credit for doing the good things that help impact your credit score.
Especially if you're doing the work of paying off the loan and doing everything right, you want to get your credit for that.
Yeah. So I think we kind of already talked about it, about why do you even care about a credit score, but like, why should you care? Like, let's say I'm someone that I'm like, you know what? I'm just going to pay cash for everything. I don't need a credit score. Why should I care about having one?
Yeah. Molly and I were talking about this earlier, and I think the best way that I can sum it up, if I were telling this to a friend, a family member, anyone that I cared about, the thing that I would say is, caring about your credit score keeps the lending power in your court. When you care about your credit score and you have a good credit score and you're doing all the things right, that puts the power on you to be discretionary about where you're going for a loan, to shop around your loan, to maybe get a higher limit than you had previously, better interest rates. That's a huge one too, is better interest rates. It just kind of puts the power back on your side when a lot of these things, I feel like as a consumer, we don't get a lot of control in, but just put some of the power back in your court.
Yeah. Another reason I think you should care about your credit score is, working for a financial institution, most of the time they pull your credit when you go to work for them. Your utilities, if you ever take that step to move out on your own and rent an apartment and you set up your utilities, they pull your credit to kind of determine, like, is there going to be a deposit required? Things like that, because they can see your how trustworthy you are, what kind of history you've had with your credit. It gives them a lot of information. A lot of times I hear it called like your report card. It's like a report card on how well you're doing with your finances. So like, there are other things outside of lending where your credit score can come into play.
Yeah. And touching on something you said earlier about interest rates, when you have a better score, oftentimes you are able to get a better interest rate on a car, a house, a credit card. Yeah. And what that will do is that'll save you money in the long run.
Absolutely.
So you might not care about your auto loan having a high interest rate, and that's fine. But if you want to do the math long term, I mean, that could save you thousands of dollars in the long run to obtain that better interest rate. So that's, I also wanted to make sure we touched on that too.
Helping future you.
Exactly. Exactly.
One thing that I get asked from time to time is about this whole idea of hard inquiry versus soft inquiry. And so anytime that you are looking at your credit report. And you can actually go to annualcreditreport.com and you can look at your credit report one time every 12 months for free. And you can see what's on there, what's being reported. And that's considered a soft inquiry. It's not hurting your credit score for you to look at it.
Yep.
But if you're asking to borrow money and someone is pulling your credit, they're doing what we call a hard inquiry, which can affect your credit score for, a segment of time.
Yep.
Eventually it does go back up, but you don't want to go out and just have all these hard inquiries pulled on your credit. Because that can be a lot.
I'm glad that you bring this up because that happened to me. I went out and I got a car loan and they pulled and I knew this was going to happen because I worked here when this happened. And they pulled my credit score.
Yes.
And they pulled it 5 times. Like each financial institution that they were doing the loan with pulled it 5 times. Yeah. So I logged in to my through our institution. There's something called free credit score, which I can monitor my credit score. And the first time I saw that dip, I was like, ugh! And I texted my husband and I was like, oh, that was hard. Yeah. That was a hard hit. So I've experienced the difference in a hard and a soft pull. It does come
back. It just takes time again.
Yeah. And on that free credit reporting tool, I also wanted to say a lot of places offer that where you can monitor it. I know you mentioned the one place per year, but I check mine probably weekly. I'm like, does it change weekly? Absolutely not. It's like at this point, it's going like a point up a month. But I love seeing I'm still checking it. And there's different simulations you can run. It's like, if I paid off this amount of my balance, how would this affect my credit score and things like that.
I love that about here at the credit union, at TVA Credit Union, how our credit score does that because you can set up goals for yourself and it'll give you tips on how you can get there, which I think is amazing.
Oh yeah. And I love the tips. They are so worthwhile because sometimes it's like out of the box things that I hadn't thought about. Like anyway, I like the goals a lot.
Yeah, me too.
Goal getter.
So that's a lot of information.
It's a lot of information
that we just threw at you.
Two information heavy episodes.
We're gonna have to be a little light with our coin toss, I think.
Yeah, we're gonna have to have fun with it
because we'll have fun.
We talked about credit cards, credit scores.
Yes.
And again, if you guys have any questions, feel free to email them to podcast@tvacreditunion.com because we know, we're trying to skim the surface a little bit, but if you want us to dive deeper into certain aspects of these topics, we would love to. So if you're curious, just send us an email.
Send it on.
Yeah.
All right. It's now time for my favorite time of the episode.
I think I threw it last time. I think you need to throw it. I feel like I just always be throwing it. It's probably warm from being in my hands the whole episode.
It's very hot. It is a very... Lincoln, be warm.
Oopsie.
Okay. So here we go. We're in the part of the episode where we do coin toss, where one of us tosses this coin, the other one yells heads or tails, and whoever wins gets to pick a category that we discuss. It could be a save or splurge moment, a credit card confessional,
money buffing myth.
Money buffing? Money myth?
Money buffing? Money myth buffing.
I can't even say it.
I can't say it.
I was making fun of you. That's what I get.
Genuinely tried on that one.
You genuinely tried. So anyway, and then the loser, they have to share their weekly money win.
Which is not really a loss.
Which is not really a loss. But okay, so you're going to call it and I'm going to toss it. I'm going to toss the coin.
Okay.
All right, ready?
Yep.
It's tossed.
Tails.
Ooh, girl.
Oh, I won.
I don't have a weekly money win, though.
You don't have a weekly win? Mm-mm. That stinks.
I got it. Okay, I'm good.
Okay.
I got a weekly win.
I think for this one, I'm going to do a story time.
Oh, we haven't done story time in a minute. Okay.
Story time is that I don't know if people out there have seen on TikTok the... What are you...
Sorry, my legs asleep.
So bad. I don't know if people have seen on TikTok the no spend January that is going around like crazy.
Yes.
Around like crazy.
Yes.
By the time this airs, we'll be through it. But Molly and I have both seen it. And I just have to say, first of all, killing no spend January, both of us. But I'm speaking for both of us. It's just story time. Killing it. Second, it has developed a love of and like exposure to, I think, thrifting.
Yes. It's all over my feed right now.
Mm-hmm. Yeah. So
she said, mm-hmm.
Yes. So I guess my story time is No Spend January has been very illuminating because I think for me, I struggle with like impulse spending a lot.
Same.
That's like something where I know exactly what they're doing on TikTok. Like I know what they're doing.
It. We're
they
in
want
marketing.
Me to hit that. Exactly. Like I know you want me to TikTok shop and link, like a link in bio. Like I'm going, I'm already there. So I think the story time for me is that it's been really illuminating to kind of like pause on the impulse spending and find some of these thrifting accounts that are doing so well and like so consciously turning things into like thoughtful gifts or like they're doing like, I think the big one for me is I'm a big kitchen girly. Like I love being in my kitchen. It's the time that I get with my husband. We both love cooking so much.
Yes, you do.
And they take these items and they're so out of pocket, like they're crazy thrifted items.
Yeah.
And they will say like, come style this with me.
Yeah.
Whether it's clothing or something for their kitchen or like a little lamp and they put it in a new spot that I just would have never thought to do that, or they take it and they craft with it.
Yeah.
I don't know. I feel like it's been very invigorating creatively to see these like, don't just buy what you need. Like you could make it. You could do it.
I think that's what I love about it. I've been seeing it from the perspective from gifting. Like you can get some really nice, cool things for your friends and just kind of save up and only spend like $20. I'm not saying like you spend what you want to, but if you're looking for a cost-effective way, you can get some really nice pieces. Yeah. Especially like for me, knowing that you're a kitchen person, because I feel like there are lots of kitchen items that are really, nice and cool or vintage. Yeah. That can make a really nice gift for you.
I follow this one account too, which is so interesting that she does gifts. She's like she'll create gift baskets for her friends and stuff like that. But her other thing she does on her account is I don't know, people with kids out there know what jelly cats are, but this person has a jelly cat. Yeah. And she's also like a younger mom, and she also has found like Awala bottles.
Oh, nice.
And Stanley's. And so she'll let go and say, come thrift a jelly cat with me, which is a stuffed animal, guys. I don't know if you guys know what that is.
I'm lost on the jelly.
So I feel like also Gen Z will know what jelly cat is. But like, so jelly cats are a little stuffed animal, and she'll say, come thrift one with me. Yeah. And she'll like go to the thrift store and find them. So it's almost like it's such a good reminder of like, you don't always need to impulse buy these things. Yeah. If you look thoughtfully for these things, oftentimes you will find them.
Yeah. And I think there's some misconceptions sometimes with thrifting. Like, and sometimes even I forget, like, it's more than just clothes. Like, I always think like clothing and vintage t-shirts and things like that, because I feel like there is an abundance of clothes at a lot of thrift stores. But you can find a lot of cool, like just different unique items for your home, or like we've said, like gifts. Like, so it's more than just clothes.
Yeah, it is 100%. So that's kind of my story time, is just like I've been having a great time with thrifting. There's a couple that are still open after I go to work and stuff like that. So I've just been really enjoying that. So that's my story time. And also story time is that we're killing. Well, I think we're killing the No Spend January.
And that is my weekly win. I am
Perfect
killing
segue.
it. And so what I'm doing...
How many times have you been served up the Halara legging ad?
If I get those Halara leggings one more time,
No, you're surviving it.
I'm surviving.
You're doing it.
I'm surviving. I will overcome this marketing madness that's happening in my feed.
So crazy, dude.
So basically I don't know exactly what you're doing, but for me, I am not purchasing online is what I'm trying to do. Like Amazon, TikTok shop.
I had 2 exceptions for January, and they were 2 birthdays, and they're now done. So now I'm actually, my no spend January is no Amazon and no new clothes. Unless I like pop a hole in my shoes, I'm doing no new clothes for the entire month of January. I don't need to run out and go get something, but I cut you off. I'm sorry.
No, it's okay. It like building on that, I feel like I've spent more time at home because I'm like, if I go out,
I cannot be trusted. Hands in your pockets.
Do not let me go into the Nike store because I will buy a pair of shoes. I know I will. So no spend January, and it's going great so far.
Yeah.
And like you said, Halara leggings be popping up in my feed every day.
The goal is to make it, by the time this episode airs, we will have made it with no Halara legging purchase.
Yes.
After this episode goes live, Molly, you can get them if you want. I'll give us permission.
Oh, you'll give us permission. I will let you guys know if we have a second part to this weekly win.
Yeah.
Did I immediately
update like right here? Like I didn't make it immediately after the episode. I couldn't stop thinking about them.
No, we're going to make it. We're going to make it.
Yeah, 100%.
So Well, I think that, covers today's topic. I love the thrifting. And I think it's also a great way if you're looking to, be more sustainable with all the stuff that's happening out in the world. Like, I think it's a great choice. I have a lot of friends that are doing it. And let me tell you, they're popping off with those fits.
Oh, yeah. 100%.
It's so cute what they're pulling off. I love it.
I love it. It's a good trend. Yeah. Well, guys, that wraps it up for this episode of Money Moves. We hope that we were able to illuminate the mystery of the credit score a little bit for you all.
If you have any questions about any of the things we've talked about today in our episode, or there's some topics that maybe you want us to cover in the future, shoot us an email at podcast@tvaCreditUnion.com.
And if you like this episode, don't forget to subscribe to our channel. And if you want even more content, you can follow us at TVA Credit Union on TikTok, Instagram, and Facebook.
And with that being said, keep making those money moves.